Hey guys, how's it going? And thanks for coming. I'm Nick, and this is Real Life Money, where we talk about real life and money, because schools are not. So let's get started. So welcome back to another stock market weekly recap, guys. If you've been following us, welcome back. And if you're new, we look at the previous week. We're looking at September 11th, 2017. We look at the previous week just to see how the stock market did, some popular news stories, and we look at some specific stocks and mutual funds to see what's off. Popping off, that is. So hopefully you guys had a fantastic week. The market was very interesting, so we'll be getting into that. But first, of course, September 11th, not a very happy day at all. So, moment of silence. Let's get into it, guys. Real quick before we get started, I'm going to be purely focusing on looking at Yahoo Finance with you guys because I use them all the time. I think they're great. They have the information that we're looking at. And if you've been following through my other videos, I'm not really going to be showing that other chart. I'm not really familiar with it. I don't use it. And it's not the best to look at. I just used it because it showed us what our return was from the beginning since we invested 6 weeks ago. So I'll be telling you guys how we're doing so far, but we're going to be looking at Yahoo Finance. So like we said, time to pop off, boom, to the Dow Jones. Of course, Dow Jones, 30 of the largest companies in America, guys. We are above 22,000 once again, baby. Oh yeah. So you can see we closed, this is Friday's close, at 22,268 and some change. A little bit up. And you can see this whole week, I have it set to 5 days, we are up very, very nicely. This week we are up over 1.3%. Now, a couple main things why the market was up was, one, that the North Korea and hurricane fears kind of faded away during the beginning of the week. Again, if you were in those hurricane areas, best of luck to you. Hope everything works out well. But those fears have moved on, and that's why I kind of rebounded on Monday. For the North Korea thing, that's fading away as well, and I think the kind of scary thing is, guys, like, they're continuously launching missiles. We all know that, it's on the news and stuff. So we see that, it's like, oh, they're launching another missile. Okay. Like, it's kind of a normal occurrence. Like, no one kind of cares anymore. It's like, oh, another missile. All right, so what's going on over here? So whether we should be scared of this or not, we're just going to have to see. But since these fading fears on Monday, just Monday alone, it was actually up 1%. And of course, this was the week of Apple, guys. They had a bunch of releases with their new iPhone. I'll be going into a little bit more detail when we go over their individual stock in a few minutes, but they had a bunch of things going on. They were all over the place. So next, looking at our S&P 500 index fund, of course, 500 of the largest companies in America. Bop! We got the ticker symbol SPY, also known as spiders, but on Friday they closed at $249.19. They are slightly up for this week of over 0.3%. Again, they were all up and down from the fading fears with the Apple releases, and they have a bunch of things going on with the government as well. Of course, with the debt ceiling, how our economy is going to be changing, possibly with some tax breaks and stuff like that. I believe there'll be stating something about that next week, so I'll definitely keep an eye out for you guys there, and we'll just have to see what the heck happens with these taxes. Alright, so this was the week of Apple. Let's talk about Apple. We're popping off with them. They have been all over the place. They have released things on Tuesday. They, again, all over the freaking place. They popped a little bit, then dropped. No one knew what investors were thinking of it. By the end of the week, though, they were fairly flat, just negative 0.1%. You want some Apple? I'll give you some Apple. So the hugest release that they have had this week, guys, was the iPhone X. Very slick looking, gotta say. You got the whole screen of just a screen. There's no more home button or anything like that. Looking very slick. I heard the camera is very, very high quality. They have also released, of course, the iPhone 8 and 8 Plus, so that's the other thing, but those are slightly cheaper. The main focus was on the iPhone X. Now, I'm personally not a tech guy whatsoever. I'm not going to be comparing, the different processors. I don't know that stuff. But I'll show you a quick comparison of the older models to this one. You can see right here the different prices and different statistics of what they have from everything, basically. They are selling this bad boy for 999 buckaroos. Also, quick side note, they are releasing another or new Apple TV and as well as Apple Watch 3 or Series 3. So a bunch of big things are coming out for them. Now, to think of actually buying into Apple at this point, I'm actually thinking of doing a video, possibly my next video, of going into a little bit more detail of their releases, and just analyzing what they have out and if you should be buying it. But for right now, if we're talking about the long term, guys, I'm talking like year, 2, 3, 4, 5 years out there. Yeah, it's probably going to be higher. It might be the first $1 trillion company in the world. But for short term, I wouldn't just buy Apple just because of these releases. Anything could really happen. Going back to the chart real quick, you could see that it popped during the release a little bit above 162, and then it dropped below 160. So who knows? This could be a decent time to buy in. But I wouldn't say just to buy in just because of these releases. Of course, do your research, see what you think. Alright, so that's enough about Apple. Gotta move on, guys, to our next stock that we're looking at is Disney. Disney, they did a pretty decent week, actually. You could see that they closed at 98.52 on Friday. For this whole week, they are up around 0.8%. But they were having kind of a bouncy week. Since the overall market was up, guys, of course, most stocks are going to be up. And you're going to see probably a big swing in the beginning of the week because that's when the rebound kind of happened. The Dow was below 22,000. Geez, it's up there, guys. But that rebound, those fading fears, and it broke that 22,000 mark again. So people are fairly optimistic. And moving on over to our boys over at Facebook, guys. So they did close at 171.64 on Friday. A little bit down for this week. Not a huge movement, but they're down around 0.5%. Moving right along to our next tech stock, guys. Actually, a bunch of tech stocks did get hit this week. So for Apple, you can see right over here, they did close at $920.29, guys. They did have a down week. You could see that going on. For this week, they were actually down for 1.4% or just over. So a couple quick things for our friends over at Google. They are dealing with a lawsuit going on. Lawsuits are never good, guys. So that's why they are a little bit further down than, let's say, Facebook. Let me just read what I have here. Google sued by female employees in gender gap lawsuit. So, bad things could be happening. Now, of course, that's not like a good thing to happen, but I want to say, like, generally speaking, with lawsuits, of course, that's not a good thing to happen. So that makes the stock price go down. Generally, it passes and fades just like everything else, and then it kind of rebounds. So I wouldn't say that it's a huge problem for our long-term holdings. Now on the flip side, on the more positive note for Google, they did state that they are investing, I believe the amount was around $1.1 billion into self-driving cars. Now, I don't know what you guys think of that, but it seems to be kind of the way of the future. Definitely far, far future, but might be closer than we think, guys. But I like Google, especially for the long term. I'm really not worrisome. I don't know if that's the right word. I never used that word in my life. I'm not worried about Google stock. In the short term, yeah, it could get slapped up a bit. For long term, stay with it. Alright, so next one for you coffee caffeine addicts. We got Starbucks going on. On Friday, they did close at $54.67. They had a pretty good week, up just over 1%. Again, it's that season again, guys. They got their pumpkin spice lattes. Go and get whatever you want. But relating to the iPhone releases and Apple stuff, quick side note, they are doing with wireless charging. So Starbucks is eventually going to be set up for those wireless charging stations. So don't worry your sweet little behind about that. So those were the individual stocks we got going on, what we're looking at, and let's move into some of the mutual funds that we're actually looking at as well, starting off with, boom, Fidelity Contra Fund. You can see the chart. I do have it set up for a month, and I hovered over since the beginning of our week. So the week started at 119. Friday, they close at 120.68. They are up 1.25%. And quick recap with this Fidelity Contra Fund, they have a bunch of different individual stocks, individual companies, mostly growth oriented. So like the companies that we're actually talking about, they have Apple, they got Google, Amazon in there, Facebook, and also a quick news article that I remember seeing at the beginning of the week, guys, with Fidelity, like we're looking at now, and Vanguard. Couple funds that we're looking at, the index fund that we have, the S&P 500, and also the small cap fund that we're looking at, which is the next one we'll be seeing. But those two are very large mutual fund companies. Now, throughout history, Vanguard was mostly known for its lowest fees, like ever. They're like definitely around probably even less than 0.1% for their expense ratios. But there's actually a little fee war going on between Fidelity and Vanguard. Vanguard is planning on dropping their fees lower to actually compete with Vanguard, which is good because it's saving you guys money. So with less fees, that'll make you keep your greater returns. And talking about Vanguard, we do have our next Vanguard fund dealing with small caps. They have this week they did pretty well as well. They are up around 1.13%. Again, this is kind of just an experimental type of thing. I'm not know too much into this, so I kind of just wanted to track this to see how it goes. Small caps or small companies, more risk, more return. And a new thing that I'm going to change up at the end of the video, I'm just going to give you what we would have made since the beginning of our holdings, guys, or since we started looking at this, which was 6 weeks ago. So let's start off with Apple. We would be up 2.23%, very nice. Disney, we would be down around 8.5%, guys. Facebook, up 1.19%. We have Fidelity Contra Fund. They would be up 1.43%. Google, they would be down 0.83%. Starbucks, down 1.39%. Our index, 500 index, spiders, they would be up 0.74%, and our small caps index fund would be up 0.68%. And quick overview for next week, we're going to be looking at what the heck the economy is going to be doing with the debt ceiling, with the tax breaks and all that stuff. So we'll keep you updated, of course. And again, of course, I would tell you guys even a little bit to invest monthly into an index fund. Over the long term, it will go up. A lot of people would suggest that. So if you have any questions, comments, concerns, leave them down below. I would love to see what you guys have to say. And don't forget to subscribe to my channel, Real Life Money, where we talk about real life and money, because not many people are, guys. So thank you so much for watching, and I'll see you in the next one.